Hello everyone, this is Marshall Gittler, Head of Investment Research here at FX Primus, bringing you my North American opening market comment for Thursday, September 22nd. Well, after all yesterday's excitement with the three central bank meetings, it's back to normal today, or even a little bit quieter than normal. There were no major economic indicators out during the European morning. The North American day starts with the Chicago Fed National Activity Index. It's expected to fall somewhat, but the expected figure is higher than the 3-month moving average of this extremely volatile series. So I'd say it's actually favorable, although I don't know if the market will see it that way. The Kansas City Fed Index, the blue line on this graph, comes out later in the day. It's expected to rise a bit, but it isn't a particularly big market mover, though. Now, at the same time as the Chicago Fed index is being announced, the initial jobless claims are coming out too. They're expected to be unchanged at what's almost a historically low level. And remember that this series isn't adjusted for the increase in the labor force, so in fact it's a very, very low level. Oddly enough, it looks like the weekly jobless claims tend to have a bigger impact on the currency market than the monthly Chicago Fed index does, at least when the figure misses expectations. So net, I'd expect that if the initial jobless claims remain at around these near record low levels, that might outweigh a small month-to-month deterioration in the Chicago Fed index and at least keep the dollar stable. Existing home sales, while an important economic indicator, doesn't. Are the existing home sales singular or plural? Anyway, it doesn't have that big an impact on the FX market. But after housing starts and building permits both fell sharply, greatly disappointing the market on Tuesday, a rise in house prices and in existing home sales could improve sentiment towards the U.S. housing market and be positive for the dollar. The only major European indicator out today will be released relatively late in the European day. EU consumer confidence is expected to improve slightly in September, as the evidence mounts that Brexit has so far not had any big impact. So far. German consumers are particularly happy these days, as unemployment in Germany is the lowest since at least 1991, when the current statistics survey began. A further improvement in EU consumer confidence could boost the euro later today. This is Marshall Gittler, Head of Investment Research at FX Primus. Get more market insights on our education pages and turn your trading ideas into action with FX Primus, the safest place to trade.